Welcome back to Return My Capital. Today we're going to take a look at two thematic ETFs from the semiconductor industry, and they've been getting absolutely hammered for, well, really the entire year, but especially this past week as we have seen these tariffs go into effect. The two ETFs are the SOXX, SOXX, and SMH. So we'll quickly go through each of them individually, compare them against some more broadly diversified tech as well as globally diversified indexes and ETFs, and then take a look at those metrics. So here you're seeing the SOXX, and that is from iShares. Today alone, right now, I'm recording this Friday, April 4th at say 10:20 a.m. Eastern Time. It's down over 6.5%. We see over the last week down 13.5%. On the year to date, down over 26%. For the year, past year, down 30%. Past 5 years, still up 144%, but you see this dip in the curve at the end of this chart. And on the 10-year, now still up over 400%, gives you a little bit of perspective on how well these semiconductor companies have done over the last decade. But again, taking a look at the chart, you see this now reverting back to levels really not seen since several years ago. So 2021, 2022 timeframe. Looking here at the SOXX, again from iShares, obviously trading at the very bottom of the 52-week range, a 0.35% expense ratio. You can always expect a slightly higher expense ratio with a thematic ETF where it's specifically focused on one industry or a subset of an industry. Quarterly dividend payer. This was updated very recently. When I checked it the other day, the dividend rate on an annual basis was lower than is showing now, but $2.21 a year. Yield is now up to 0.87%. Not a high dividend payer, but actually when I checked the other day, the yield on this was about a quarter less. Assets under management just under 10 billion, so it is a significantly large ETF. Quickly compare the returns to the S&P 500 over the past year. SOXX on a total return basis, again, down 24% now. S&P 500 still up 5%. We'll see how long that lasts if things keep going the way they are right now. Over the past 3 years, the SOXX is up 13%, S&P 500 24%. On the 5-year, SOXX is up 172, S&P 500 134, and then on the 10-year, 510, pretty incredible for the SOXX, and 212.5 for the S&P 500. Looking at the top 10 holdings, there's only 35 holdings in the SOXX, right? So it's a fairly concentrated ETF. But of those 35 holdings, 58% is made up by the top 10 holdings. And the top individual holding is Texas Instruments at 8%, NVIDIA 7.8%, Broadcom 7.5%, AMD 7.3%, Qualcomm 6.9%, KLAC 4.3%, Lam Research 4.2%, Micron 4.2%, Intel 4.1%, Monolithic 4.1%, and we can actually kick over here to the actual profile sheet from iShares. Let's see here. So you see the performance listed, already covered that. When did this ETF? Okay, this fund inception was back in 2001, July 10th, 2001. So we're going on 24 years now of this being in existence. So again, you'll see the top 10 holdings that we just covered, kicking over holdings 11 through 20. And actually, even just because of the recent volatility, you do see some variation. So here, actively showing Applied Materials is now the 10th largest holding, Intel down to 11, but moving on from there, NXP Semi is the 12th, ADI Analog Devices at 13, TSMC with 3.7% weighting. That's going to be significantly lower than in the SMH that we'll get to in a second. ASML, the manufacturer of those high-end lithography machines required for the manufacturing of the semiconductors at 3.7, same weighting as TSM. We've got Microchip Technology, 3.65, Marvell, On, Semiconductor, Teradyne, Entegris, haven't heard of Entegris. You've got Skyworks coming in at 21, Lattice Semiconductor, Qorvo, Onto. So you see there holdings 21 through 30, and then 31 through 34. Dividends, On the SOXX here, a little inconsistent recently. You see it peaked out in 2023 at 1 point or $1.50 annual, 2024 $1.45. So it's not necessarily up and to the right dividend growth chart, but certainly you can see the trend, and that's encouraging. The 5-year dividend CAGR has been 6.3%. So with that, we'll now kick over to SMH. And again, this would be the VanEck product with a similar goal. So on the day here, again, Friday the 4th, down 6% today, just down 11% this week, 17.3% over the past month. On the year to date, down 24% over the past year, now down 19%. On the 5-year, this is where you see the variation, up 227, almost 228%. And on the 10-year, still up a cool 553%. Just as you saw with the SOXX, you see the change here at the end of the chart just recently. So highs on this back in, let's say, July 8th of 24, it was sitting at 275, now at 183. So certainly trading at the bottom of the 52-week range. Same expense ratio, 0.35. Dividend for the dividend from an annual perspective, $1.07 for a 55% yield. So smaller yield on the SMH, and you'll see why when we get to the individual holdings and the differences there compared to the SOXX. But it's also double the size at 17.5 billion AUM. Quickly looking at the returns for SMH compared to the S&P 500, total return over the past year, down 13% here for SMH compared to 5% up for the S&P 500. Over the past 3 years, SMH 50.5%, and that compares favorably to the S&P 500 at 24%. And you see the comparisons here for the 5 and 10 year, pretty incredible returns for SMH. So 261% on the 5 year compared to 134, and then 708% on the 10 year, pretty mind blowing compared to 212% for the S&P 500. Only 26 holdings in the SMH, so even more concentrated than the SOXX. So the SOXX had 35 holdings, SMH only has 26. And then even of those 26 holdings, the top 10 make up almost 72% of this ETF. So you're really only picking a few very, very concentrated investments here with the SMH. So the top holding is NVIDIA, almost 20% of the SMH, followed by Taiwan Semi at just over 11.2%, Broadcom at 7.9%, Qualcomm 5.2%, ASML 4.9, AMD 4.75, Texas Instruments. This was the top holding in the SOXX. It is the the sixth holding of the SMH at 4.7%. Applied Materials 4.6, Analog Devices 4.5, KLAC 4.3. We'll quickly look here. This has, again, there's some variation as things are changing as quickly as they are, but this is the total holding list on the VanEck website. So you'll see Micron, KLAC, Intel, all kind of jostling around at the 4.3, 4.3, 4.1 weighting. Moving down, you've got Lam Research at 3.7, Cadence Design Systems 3.3, Synopsys, Marvell, NXP, Semi, Monolithic, Microchip Technology is the last holding that holds a 1% weighting or higher. And then the few that are under 1% are ST Microelectronics, onsemi, Teradyne, Skyworks, Qorvo, and Universal Display. We'll quickly compare. Oh, you see the dividend history here for the SMH. The one outlier, obviously, being 2019, where it paid a $2.12 dividend. That was prior to a dividend split. I think that was a 3-for-1 share split, not a dividend split, but a share split. I think that was a 3-for-1. Correct me if I'm wrong. But then you see these annual dividends recently. It was $1.20 in 2022, followed up by $1.04 and $1.07. So not a consistently growing dividend payer, but kind of makes sense that it's focused on price appreciation with how well NVIDIA especially has done up until the past, let's say, 2-3 months, Taiwan Semi, Broadcom, etc. We'll quickly compare these two with some additional growth ETFs. Let's go ahead and edit the symbols that we want to compare against here. So we've got the SMH and the SOXX. Let's also go ahead and compare this to VU, the S&P 500, as well as the Qs. And we'll go SCHG from Schwab, and we'll do this on a total return basis so that we factor in the higher dividends of those other ETFs. I mean, just look at these charts recently. You see the bend at the end, if you will, here, just absolutely fallen off a cliff this week. But if we look at the year to date, not that any of them are performing particularly well recently, but you'll see that VU, sadly, is the top performer, down, let's say, 10% year to date plus. The SOXX is the lowest performer, down over 26%. If we kick this out to the past year, I believe VU is still positive for the past year. Yeah, we see VU is up under 5%, SCHG not far behind that, but you see the two semiconductor thematic ETFs at the bottom there, the SOXX down 24%, SMH down 13%. Let's go ahead and look at the 5-year. This is where you'll see the outperformance of the two semiconductor ETFs. So over the past 5 years, SMH is the highest at 261%, followed by the SOXX at 172%, although SCHD is close behind SCHG. I don't know if I said D, followed behind with 159%, the Qs at 137%, VU at 119%, and the 10 years where you really see that dispersion with the SMH just blowing everything out of the water at just under 700%, the SOXX at just under 500%, the Qs at 352%, SCHG at 280%, and VU at 206%. Quickly to show the comparison again between these two semiconductor ETFs, you see the providers there, VanEck for SMH, iShares for the SOXX. Same expense ratio of 0.35%, and the returns, again, AUM, like I had mentioned, about roughly double the assets under management for the SMH compared to the SOXX. Let's say double the dividend in the SOXX compared to SMH. You see that there with the CAGR. There's really no dividend growth to speak of for SMH. The holding differences, 26 for SMH, 35 for the SOXX, and the top 10 weighting, just how concentrated both of these are really, but especially SMH. It's really a bet on NVIDIA, TSM, and Broadcom at this point, at least as it's currently constructed. So hold on to your seats, your hats, or whatever you're supposed to hold on to. It's been a rough week. It's been a rough year to date so far for both of these. Not sure when it'll get better, but certainly as you've seen with the previous, not that that's an indication necessarily of future performance, but as long as we are looking to the long-term trend of increase in compute, AI, these should still be solid investments as long as your time horizon permits you to appreciate that return. So thanks for watching. If you enjoyed it, like, subscribe. Good luck. It's pretty messy out there this week, and we'll see how things progress over the spring and summer months here, see if it gets any better going into the fall. Thanks for watching. Take care. Bye-bye.